Good morning and welcome back to Almus Market Mornings. Rupee has seen some great bout of volatility from the initial weakness at the start of the year to the strength seen in the last few days. On Friday, it broke the psychological rupees 86 level to close just below it. Morning, JK. I'm sure our listeners are very eager to know what's next for the rupee. Is this move sustainable, or do you think there may be some reversal on the cards?
Good morning, Swaraj. Yes, I think rupee's strength has somewhat surprised many in the sense the speed with which it has gained. If you look at the top at 87.95, at 86 we are more than 2.25% stronger for the rupee, and that has happened in quick time. Particularly the latest move from 87.30 has happened quite quick. It had its reasons. We had some flows, inflows, and then there was a long unwinding in the offshore market. And then, of course, we have also had a very good trade data, where combination of merchandise and services actually put India into a surplus position for the month of February. These numbers were, I mean, these factors were actually behind the rupee moving. Of course, the year-end factor was also there. But yes, the mood question, as you said, is whether we break 86 and go even further lower. I have my reservations about that because this actually has been a one-way move so far. And like RBI was not aligned with the one-way move when the rupee was weakening, they would not be aligned with the rupee also strengthening one way because there are strong reasons for that. First of all, it could hurt our exports. We're still trying to, balance our trade. Secondly, the RER, though it has corrected from, above 107 to below 103 as on February end, further strength will again make it overvalued. So, and we are also seeing in the recent days, dollar index correcting higher. And Chinese yuan, if you look at the fixing by the Chinese central bank, every day they have been fixing the dollar quite higher. And the Chinese yuan has steadily moved, rather, the USD Chinese yuan has moved steadily from 7.22 to 7.26 now. And finally, any one-sided move can finally result in a disruptive move later. So I guess RBI will be aligned with putting a floor somewhere around these levels, maybe 85.85, and which also has a very strong chart point. And look for a rupee to slightly weaken, but may not weaken substantially. It could at least initially target 86.50 with some sort of a year-end buying possible from PSU companies. And also, the swaps also come into play this week. The 10 billion buy-sell swap from RBI, that also will come into play. Overall, expect this move, even if it has to continue, it can continue only after a correction. This is my view. Therefore, I wouldn't be a seller at these levels. And I'll be actually watching for two things: how the dollar index moves from here. Just to give a perspective, euro dollar, which has had a strong run to the upside, did not gain after the the German Parliament approved the debt break, and which means there is some buy rumor sell fact at play there. And also on the chart there is a bearish engulfing pattern on the euro USD, which shows that it can fall to 1.07 in a correction. Longer term, I feel rupee, your dollar will be weaker, but near term dollar strength can be seen. This can align with the fact that we have the tariff decision next week at on April 2nd, and in some of the statements, Trump has indicated there will be no major change in the tariff. So all these things, I think, support the USD INR below 86 and possible bounce towards 650. Yes, further from there, I think that direction will be taken after April 2nd or the year end, of course. Overall, on Friday, we did not have much of events on the global markets. And there were mixed statements from various Fed members who are, some were aligned with the QT being reduced, some were not aligned. and they were also not aligned with the market's conclusion that US is getting into a stagflationary situation. A mild correction is what they are looking at as far as the economy is concerned, but still everyone is on the watch out as these things can reflect in the coming numbers. Actually, the Trump administration has completed 2 months into office, and there have been so various policy pronouncements. Some have been implemented, some are yet to be implemented, and there is a kind of the misalignment with other partners like Europe. Europe has now started to manage its own defenses. There is a talk that whether NATO will exist going forward. There's also some reports suggest that the Europe is skeptical about whether US will continue to provide the dollar funding support in times of crisis because of the change of the government and policies, where that more of America first and that kind of policy. So there is a lot of change in the financial world order which is taking place. So we should be on the watch for the dollar to take a decisive move after April 2nd, when a lot of decisions are expected. In the meantime, we have the GDP and PCE inflation numbers from US this week. GDP is obviously going to be a backward-looking number, but still it may indicate whether from the from the February estimate, whether the estimate of Q4 has moved lower, and what is the outlook for the coming quarter based on the consumption pattern that has been emerging. And according to the more important would be the preliminary survey on manufacturing and the services that will be out today. And that survey would indicate how the manufacturers and the businessmen see the conditions for future expansion and in the activity. So these numbers would be important. Of course, PCE number is not likely to throw up major surprise based on CPI and PPE numbers. So these are some developments or economic data points that we would like to see, and also the April 2nd deadline for tariffs that we would like to see before we come to the next assessment on the dollar's direction. Although based on various other factors like QT being reduced and then market starting to discount more rate cuts from Fed, and Fed themselves saying that the inflation impact of tariffs would be transitory, feel that dollar's vulnerability is more on the downside, but that will happen only after some correction. So that correction can actually impact the USD INR also. That's the overall view as we start this week. Some good data ahead this week. We are done away with most of the central bank decisions, and we are looking forward to the economic data to assess how they move forward with their rate decisions in the upcoming meetings. Thank you.
Thank you, Jake. And of course, when it comes to rupee strength, it has surprised many. The pace of it has surprised many. But the long unwinding, the flows, the good trade numbers, merchandise plus services, and year-end related seasonality has seems to have resulted in this strength. But one important thing is RBI may not actually want a very strong rupee because it would hurt exports, and moreover, the REER, which has corrected but still remains in the overall overvalued territory, may see some more stress if this strength persists. Another important factor to note is the Chinese yuan fixing has also been weaker in the recent times, so possibly 85.85 may be protected on the downside. The things to look out for would be the dollar index moves from here because euro is also not making further headway. The reciprocal tariff starting April 2nd would also be closely tracked. And we have got some important data this week. US GDP and PCE, which is the Fed's preferred inflation gauge, it would be released this week. Participants, when it comes to GDP, would be looking at the estimate for Q4 GDP and the consumption picture because US economy is largely consumption-driven economy. So how the consumption scenario looks like would also be something investors would be closely tracking. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.